Martin, okay, when you look at this slew of central bank meetings taking place this week against the backdrop of an S&P 500 now in correction territory, what's the wild card for markets?
Well, I'm not sure there is a wild card. In fact, the surprise might well be that central banks once again sit on their hands and pause or continue their pause and wait for further data that's coming through. And of course, the inflation data seems to be mixed, although heading in the right direction overall. There has been quite a bit of talk or speculation in regards to the Bank of Japan's next moves, which is obviously that they might look at that cap on the 10-year JGB yields might be raised again. But our view is that they're unlikely to. We think the government seems too keen to avoid activating the pledge to buy unlimited JGBs if necessary. So at this stage, we think it's more likely that central banks will again sit and wait to see how data evolves.
Just with regards to market sentiment and direction right now, how attractive are equities for investors with yields at this juncture?
Well, there's obviously two components of that, isn't there? Firstly, the earnings side has been probably a little bit more, has been surprised to some extent on the upside, certainly from the latest quarterly reporting season out of the US. And equally so with what's happening on the geopolitical front in the Middle East, obviously there's a risk-off component, obviously it erodes confidence. But having seen now, a fairly healthy correction from a very strong run through this year, equities are starting to look quite interesting. And in particular, if you start looking forward, and certainly it's Macquarie's view, thinking about that time frame by when central banks actually start move to cutting rates, which is most likely second quarter of next year, markets will start anticipating that.
Okay, and they haven't started anticipating that already. We kind of knew that the rate cuts were coming at some point next year, right? At least for the Fed.
Well, there's been enough speculation or conjecture around the time frame by which, if rates have now peaked from a central bank policy perspective, what's the duration by which rates remain at this peak level? And that's really probably the unknown for markets at this stage. So there's no doubt, and we're thinking about it as well from a client perspective and a portfolio perspective, when do we start getting more comfortable that we're going to start to see a change? I think there's still a little bit of water under the bridge yet to go through in terms of total economic data.